The previous Macro Watch video looked at the assets of 5 large central banks, separately and collectively. It showed that the total assets of these central banks combined is contracting, and concluded consequently that global liquidity is shrinking. This video will move from the asset side of those central banks' balance sheets to the liability side in order to explain how central banks pay for the assets they acquire by creating money, or more precisely, by creating base money. It's important to have a clear understanding of how central banks create money and how they destroy it, because money creation tends to cause asset prices to rise, and money destruction tends to cause asset prices to fall. We'll see that the Federal Reserve, the European Central Bank, and the Bank of England are all destroying money, while the Bank of Japan has nearly stopped creating additional money, and the People's Bank of China is creating new money at a much slower pace than in the past. All this shows that global liquidity is tightening and suggests that asset prices are likely to come under increasing downward pressure during the rest of this year. We'll begin by looking at the ECB, followed by the BOE, the BOJ, and the PBOC. We'll end with the Fed and discuss its largest liabilities: bank reserves, reverse repurchase agreements, and the Treasury General Account in greater detail. The video concludes by explaining why, in the United States, the traditional definition of base money, which is currency plus bank reserves, no longer accurately reflects the quantity of money that the Fed has created, or in other words, the amount of liquidity in the financial system. That definition must now be revised to include the Fed's reverse repo liabilities.